Hey guys, today with us is my favorite lender. Her name is Melissa. She's with Guild Mortgage. Just quick, really quick, because everybody's so busy. Melissa, today you sent me a very interesting updates. So guys, so many of you are intimidated by the cost of borrowing money to pay a home mortgage. And I get it. Everybody who's trying to buy, we have to have the same conversation. I do not think I can afford that monthly payment. Can we find a smaller house, etc., etc. Well, guess what? Something interesting is happening. You might be able to afford a higher house, a bigger house for less money right now. So Melissa, you sent me 3 updates. What were they? Tell me.
Okay, so the first one is a change in the way that Fannie Mae and Freddie Mac, so they're the ones that ultimately buy the loans, have priced loans. So they're less expensive for people with not at the highest income level, but for a lot of people, this is going to help a lot. We can get into details and some examples. The second is a down payment assistance program. So this is a limited time offer. When it's gone. But while it's here, we need to take advantage of it because it's a low interest rate, 4% down payment assistance, and just a great option for somebody. There are income restrictions on that. They're a little bit tighter. The third option has no income restrictions. So this is one that gives buyers a lower payment for the first 2 years they have the loan. We found a new way to come up with the money to make that happen. And it's going to allow more people to use that product.
Perfect. So now tell me, because most of us in the industry are very used to this lender jargon that we all throw around that really is not helping to our viewers. Tell me just in very basic terms, so most people, when they try to buy a house, they encounter 2 problems. Number one, they think that their down payment is too big and the closing costs and then the moving cost, they're just not sure that they're ready with the cash available. Any of those updates, is any of those updates available to help with the down payment?
I would say the first 2 are going to
Okay.
because the first one, so this is it's a conventional loan program. So people can put 3% down. Now, the challenge with putting 3% down with a conventional loan is that you're looking at higher interest rates normally, but this program takes out that add-on to the interest rate. So a 3% loan becomes much more affordable to a buyer as long as they fit the criteria for this.
So kind of to translate it, they can have less money saved.
Yes.
But their monthly payment will not increase.
Correct.
Did I understand? Okay, so
yeah. And to give you an example, yesterday I priced out a loan for someone who qualified for this, and normally their rate would be about 6.125 or would have been. They were at 5.75.
Okay, how much in money terms that translated into savings for them on their monthly payment?
I'm going to do a really quick calculation here. If you want to ask me another question.
Yeah, so guys, just to let you know, whenever you have a situation where they're talking about interest rates and down payment, if your down payment is less and you have less money to bring to the table, typically, that means that your monthly payment will be higher. So this is always the trade-off. Do you want a lower monthly payment, or you want a lower down payment? In this specific case, and it is very rare in the mortgage industry, it seems like this update is able to achieve both. By applying now and seeing if you can secure this program, you can achieve both the lower payment without the increase of monthly payment. So how much were they able to save on their loan?
So that would have been $71 a month on a $300,000 loan.
Okay, so almost $100 a month less, just because they talked to you and qualified for this program, right? Yeah. Okay, $70 per 12 months. It's like, $800 something multiplied by 30 years. You calculate it yourself, guys. Okay, so that's wonderful. Anything else as far as the down payment? Because a lot of people are less intimidated by the interest rate. They don't even understand the interest rate, but they know exactly how much money is in their bank account, right? So tell me more.
So that's where that second program comes in. So this is going to give that buyer, they have some fees. So the net amount is 3%, but get 3% down payment assistance of 3% of the loan amount. And that can be used to cover their down payment. Now, this is an FHA loan, so this would cover almost all of their down payment. So now they have to come up with a 0.5% of the purchase price plus closing costs But the program does allow sellers to cover closing costs as well. So
Mhm,
we're still in a market where it's potentially possible to get sellers to pay some closing costs.
mhm.
And
Very much so, by the way, very much.
yeah,
so.
I don't think that's going to stay that way. So now is a really good time to buy. So between that program that now has a 5.75 interest rate, which is
Mhm,
absolutely unheard of for that kind
mhm,
of down payment assistance.
mhm,
And normally it's like 7.25.
mhm. So if I understand correctly, let's just imagine that, let me run the scenario by you. I have somebody who contacted me and they're ready to buy, they're at about $300,000 type of a house. And they say, unfortunately, how much do you have saved for your down payment? I only have $8,000 saved.
Mhm.
Do you think that this type of program would be able to help somebody with this kind of cash saved? So tell me how that money would be distributed, and maybe they can even have a little bit money left over for the moving expenses.
So I ran numbers. Now this is for someone looking at a $250,000 house.
Okay, let's go with 250 for now.
Yeah, I did
Mhm.
it this morning. So they would be looking at, they had $8,000 saved. So
Very much so, yes, okay.
Exactly.
Uh-huh.
So for them, using this program, they would have needed, and this is assuming the
Mhm.
seller's not covering anything, they would have needed 9,100 for closing. So they
9,100, they're really close.
very, very close.
Like very good. Assuming that the seller can contribute at least 1,500, which at this point, unless they're going for a very hot house, almost any seller can be talked into, $1,500 concession.
Yes.
For now, guys, just wait until April. In April, all of this will evaporate because everybody will be selling house like pancakes. But go ahead.
Exactly. So no, that scenario would absolutely work today, I think.
Okay, so that down payment assistance, is it just for the first-time home buyers, or what was the situation with it?
That one, they do not actually have to be first-time home buyers.
Okay,
No,
they did not need to be home buyers, but it is still a hot program, right? It's still the
very,
FHA loan.
yes.
Okay,
Yeah.
so you guys don't worry about our discussion about hot programs or not. The point is that even if you're not a first-time home buyer, but especially if you're a first-time home buyer,
Yes.
go ahead and find out if that can help you. And now, what was the third update about the money being, go ahead, spill the secret to us,
So
Melissa.
this one is like, you've got piles of money out there and we want to
Okay.
use them for specific things. So what we're
Okay.
using these, and the change with this is that we can now use money from the seller and money from us as the lender to basically subsidize your payment for the first 2 years.
And let me just like rephrase that. We
Okay,
can now ask you to give the buyer some money
yes,
toward the house,
yes.
right? So this is the translation of it.
Yes.
Okay, you heard me right, guys. So the lender in this specific case, and this is very rare for a lender to step in to help a buyer or the borrower with cost of purchasing. But in this particular case, what specifically are you going to do with the money?
And so we are going to use that money to subsidize the buyer's payment for a year.
Okay.
So
Are they not going to have any monthly payments then, or how is it going to
they're
work?
still going to have a monthly payment, but it's going to be lower than it would be
Okay.
normally. So let's say
So-
they're normally 6%. Their payment will actually be based on an interest rate of 5% for the first year.
Mhm,
And then after the first year, it goes to 6. Now, if we can also get the seller to chip in
mhm,
and have a payment based on 4% for the first year,
mhm.
5% for the second, 6% for years 3 plus, unless they can refinance, which we think they will most likely be able to do.
So if I'm going to keep talking, can you calculate if we can, let's assume your buyers was 250, right?
Yep.
Can you see how much they would be saving if we were able to, and let's leave it to me to talk to the seller, right? Let's assume that the seller already agreed. And unless you guys want a really hot and expensive house, talking to the seller about subsidizing your interest rate right now, it's a fairly normal conversation in the industry.
Yeah.
So just to let you know how it works, what Melissa is talking about, and I'm going to kind of throw in a little jargon, it's called 1-2 interest rate buy down. And buy down means you have a 30-year loan that has an interest rate of, let's just say, 6%. But for the first 1 or 2 years, you can remove part of your part of that percentage and basically get some of the payment freed up. So go ahead, Melissa, tell us how it works.
Yeah, so for the first year, the seller would contribute, and this is a $250,000
Okay.
loan
Mhm.
deal. So the seller would contribute $33,688.
Okay, so we need to ask the seller for 3K. Okay.
But 3K, and then their payment, the buyer's payment is reduced by $307 per month.
Wow, 300, how much? $310.
307.
Well, I'm rounding it up always.
Yeah.
310. Okay, guys, so 310, just think of what you can do with $310 per month, a lot of things. But okay, so that was if we do the seller, and then if you chip in.
If we chip in, then year 2, they save $157 a month.
Okay, so they start with a saving of 310 and then go, and their payment increases slightly, right, on year 2. And now they're only saving $150 per month. And then on year 3, if they don't refi at that point, then it goes back to whatever it was to be before.
Yeah.
Okay,
So, and it's going back to what it would have been.
would have been without you guys helping and the sellers helping, right?
Yes. Yeah. So they still have that 30-year loan. And if they're worried that rates might go up, they're locked in.
Okay, so now tell me, can we layer those programs? So remember, we have that program with 5 point, what was that rate that you mentioned?
So this can be layered with the first program I mentioned.
That would be layered with the first program. Okay, tell us how it would be layered with the first program, how it would look like. Let's take 250K.
For that, we're going to take that. So that interest rate would be a little bit lower than what I just went over. So for that person, they would be looking at a payment savings of $301 a month for the first year.
Okay.
And then $155 for the second year, monthly savings.
Okay, and the down payment, any down payment savings?
That would be a 3% down payment.
So that would be 3% down payment versus what? What would they be approximately saving on the down payment?
Versus 5 normally.
Versus 5, so they're saving 2%. So 2% of 250 is 5K, right?
Yes.
Okay, so they would need to have $5,000 less cash to close, and they would be saving 300 plus in the first year of purchase.
Yes.
Okay, perfect. And now tell us, do they need to, what are the restrictions? You said there is a little bit of restriction, not for the highest earning individuals, but what is the top income bracket for that?
So for the first program, it's about 120,000.
Okay, jointly or
whoever's qualifying.
whoever's qualifying. Okay, gotcha.
And then same for the second, although that income restriction's about 77,000 if you're buying in Dallas, Denton, Kaufman County, I think falls into that. If you're buying in Tarrant County and I think Parker, those are at 73,000.
Okay, so guys, long story short, if you think that you're making less than 120K, then your next step is to contact Melissa and tell me which of those is the first time first serve. I forgot. Which means that the money are not there forever. The sooner you apply, the sooner you can get it. Go ahead.
The second one.
The second one. Okay, so just to recap, there's currently three ways that we can help you to save money if you want to purchase a house this year. However, not all of those options are available indefinitely. Some of them are first time for serve, means the more people apply, the fewer money are left in the program, which means that I recommend that if you're even thinking about buying this year, reach out to Melissa, talk to her and see which of those three cases you can apply to your purchase situation, how much can be saved. And then you can make a decision. If none of those helps you for some reason, you still don't have enough down payment or whatever, then you can make a decision at that time. That makes sense? Melissa, how they can contact you?
So I can be reached at 214-535-6738. Or if you just Google Melissa Condensa, you'll find my website.
I'm going to put it all in the below.
Yeah.
The links below.
And
Okay.
then from there, you can link to email and it should be fairly easy to find.
Perfect. Anything else that I need to know about your take on what else they can leverage right now to save money? Because today I want everybody to realize that this year we have the first dip in prices. that
Yes.
we've had in the last 4 years. And if you miss this opportunity, there is no telling if you will be able to buy the house the next 5 years. So this might be your only opportunity. Pick Melissa's brains.
Yeah, no, and I think that is a very real
Mhm.
statement because if you look at the millennials,
Mhm.
that is the largest generation that we've had as far as population goes. And the leading edge of the millennials have just turned 34,
Mhm.
happens to be the new current average age for a first-time home buyer or median
Mhm.
age. So that means there's a whole lot of millennials coming behind those first. Now, and also the age, that median age has gone up considerably. It was about 26 for the baby boomers. So it's gone up. Millennials have waited longer, but they're getting to the
They're,
market.
yeah, they're ready. They're at the gate. And last thing, the lowest credit score
Good
would
question.
to qualify. Mhm.
Yes, you do not need perfect credit to buy a home. Set
Okay.
540 is actually our minimum required credit score.
540. Let me just put it on record because 550 is what I've heard from you before.
540. And
540.
it
Okay.
is FHA and VA, USDA theoretically, but I've never seen
Okay,
it.
so let's not worry about USDA for now. Don't worry about it, guys. Point is, if you're at 540 or above, let me talk to Melissa about you so we can get you into the potential for home ownership this year.
Yes.
Perfect. High five, Melissa. You're awesome as usual.
Thank
And I
you.
guess I'll talk to you soon, right?
Yes, absolutely. Thank you.
Bye, Melissa. See ya. I'm going to put all of her contact information in the link below. Thank you, guys. See you later.
Thank you.